Morning, members and your guests. Yes, Chairperson, we have 6 members currently in the platform with one apology from Honorable Majola.
Okay. No, thank you very much. Honorable members, representative from SASRIA, that is South African Special Risk Insurance Association, from the National Treasury, colleagues and all stakeholders in attendance. I wish to formally welcome you to this meeting of the Select Committee on Finance, convened to receive a briefing by the SASRIA on its financial and non-financial performance, as well as a briefing by the National Treasury on its internal agreement before the committee. The committee appreciates, just hold on. My apologies, there was something that was on our members. The committee appreciates the availability of all participants this morning and notes that today's engagement forms part of its ongoing oversight responsibility over public entities and financial institutions reporting to Parliament. Honourable members, the committee last engaged with the SASRIA it was in 2023, and it is therefore important that members are provided with an update on developments since their last interaction, particularly in relation to the entity's financial sustainability, solvency position, governance arrangement, and the progress in addressing challenges previously identified. After that, our members, with both briefing, we will also release the guest and we will also handle our own internal matters, which is the minutes and other issues that we'll be attending to. So with those few words, I'm going to, by so saying, honorable members, that is my welcoming remark. Can I now ask Mr. Mangwenyu to handle item 2, which is the apologies?
Oh, yes, thanks, Chair. As I said, Chair, we have an apology from Honorable Majola, and I also received an apology from the Director General of National Treasury. That's it from my side, Chair. Thanks.
Okay. Thank you very much. Honorable Sibisa?
I've just sent an apology to Nkululeko. Can you just note it for me? Thank you.
And good morning to you.
Good morning, Chair. Apologies.
Thank you. Nkululeko, can we note that the apology from Honorable Sibisa?
Noted, Chair.
Thank you. Can I now hand over to Ndate Chikwe, the CEO of SASRIA? Mr. Chikwe?
Thank you, Chair. Good morning and good morning to honorable members. I must say, Chair, I am joined in this online platform in our offices by the board members of SASRIA. I will ask the board chair to do some welcoming remarks. The board chair of SASRIA is on the platform. Thank you, ma'am. Then I will take over with the presentation.
Okay, thank you.
Thank you.
Thank you to honorary members of the Parliament and the Chair. Thank you for the opportunity for us to actually provide an overview. I'm Nolwandle Mgogwe. In the room, we've got the board members as well as the executive committee.
Osimpo.
No, can you hear me, ma'am? Can you hear us?
Can the chairperson, or unless if you have a problem with the camera, so that the members can be able to see you, Chair?
Oh. It should be on.
No, it's fine. If you have a challenge with the camera, I can see there's a problem there. You can continue. Thanks, Chair.
I do apologize. Good morning once again, Honorable Chairperson, members of Parliament, as well as esteemed colleagues from National Treasury, distinguished guests, ladies and gentlemen, including the board members in the room. Welcome. It is certainly a privilege and honor for us to have this meeting. Your presence as members of Parliament here reflects our shared commitment to responsible governance, transparency, as well as in terms of ensuring that there's prudent stewardship of public resources. I do believe this engagement is a vital platform for constructive dialogue where oversight meets execution and where policy intent is aligned with fiscal discipline and national priorities. I believe it's through these forums that we strengthen accountability as well as deepen collaboration and ensuring that the decisions that we take and that we make going forward contribute meaningfully to the sustainable development of our country. So as we convene, we are mindful of the significant responsibility that is entrusted to us as SASRIA by the people that we serve. The challenge we face, economic pressures, social demands, and the need for inclusive growth require not only sound financial management, but also collective wisdom and partnership. We therefore approach today's discussion, as will be led by the CEO, with openness, diligence, and a shared purpose to advance the national interest and improve the lives of all citizens. I trust that our deliberations will be insightful, productive, and guided by integrity as well as mutual respect. Thank you, and I look forward to a meaningful engagement. Over to you, CEO. Thank you, Chair.
Thank you, Chair.
Thank you, chairpersons, both of the select committee and the board. I will take you through the presentation. And once more, Chair, thank you for giving SASRIA sole attention today and the amount of time you've been quite generous about the amount of time we have with you to share what has happened in SASRIA over the last 3 years and what is in store for SASRIA over the next 2 to 3 years. So basically that covers the content of my presentation. I would speak about SASRIA's evolution since its formation in 1979, share some of the financial numbers that has happened since the July 2021 incidents and so on, and deal with the issues of financial sustainability and solvency, as you have raised, Chair, economic support, and what sort of legislative and policy issues that we are dealing with where Parliament can assist. This is the business model of SASRIA. Basically, the way SASRIA sells its policies to policyholder is through all the insurance companies in South Africa. We have a legislated monopoly, and when we were formed in 1979, as the name suggests, we had all the insurance companies being members of SASRIA, and they were selling insurance cover. So the product itself, the SASRIA product, is bolted on into your normal policy. So it's an add-on to your policy, and all the insurance companies in the country basically service our clients, collect the premiums, and they're the first point of call when our client has got a claim. So that has been the business model. One of the questions that I've been asked to address since we last met in 2023 was how are we dealing with the SMMEs? Small businesses and micro businesses. July 2021 incident showed that about 30% of South Africa's small businesses, those that were in malls, were uninsured. So that's what the stats showed at the time. The sad reality is this, is that for you to be able to buy Sazria at this point, you have to have another policy. You have to buy insurance cover either through your broker or for insurance company directly, and then thereafter Sazria is added on. The ability to sell directly to policyholders, which is what will be required for us to do if we are going to sell to the small business community who do not have any form of insurance. Right now, it does not make commercial value for us to do so because of the nature that Sazria's premiums are quite low, and the collection and the sales process will be higher than the cost of us, the cost will be higher than the premiums that we'll be collecting. So as things stand at the moment, we are unable to do so. However, there are some positive developments, which include, amongst others, in terms of technology, the evolution of mobile phones, the introduction within the financial payment system of PaySharp. So now we are currently looking as to how we can use those technologies and the banking infrastructure for us to be able to sell to the small businesses. Right now, it does not make commercial sense for us to be able to do that, which is an ongoing struggle. Insofar as how Sazria has evolved over the years, as I have said, we were formed in 1979, 3 years after the June 1976 social unrest, where young people protested. Sazria, since its formation then, up to 2021 financial year, we have never ever made a loss. We had a scenario where we had made an underwriting loss in 1 year, but we had never made a trading loss. So it took the events of July 2021 to get Sazria to make quite a catastrophic loss, basically, which wiped out our entire capital and our reinsurance arrangements. Another development that happened in Sazria's life, other than the July 2021, was the Sazria Conversion Act of 1998. The Act's purpose at the time was to do a couple of things for the state. Sazria before that was a non-profit a company. It did not pay any tax or dividends, and we had government as the reinsurer of the last resort. And more importantly, we didn't have to comply with any insurance legislation. So by the conversion of the Sazria Act, what government seek to do, number one, was to get a special dividend paid, which amounted to close to 16 billion rands at the time, and that was used to settle apartheid debt. The second one was to get Sazria to pay taxes and dividends to the state. The third one was to get Sazria to comply going forward with the insurance legislation. And then finally, it was the sort of the second last step before Sazria gets privatized. However, Cabinet at the time decided not to go the full route of what the conversion of Sazria anticipated. Sazria then remained a state-owned company, and the private sector still is not allowed to sell this type of cover in areas where Sazria operates. We had the July 2021 event, which when I first met this committee, we gave you an update as to the sort of losses we had experienced, the sort of amounts, and how we were preparing ourselves to recover. So this is what has really happened. 2021, 2022, we had a premium income of 3.1 billion rands, or call it, if you want to round it up, as Mzi will say, 3.2 billion. As you can see, we've had a steady growth in the business, and we had, as I said, that a loss in July 2021 of over 24 billion rands. So what has happened in the last financial year? We have just closed out the current or the immediate past year. The financial year ended on the 31st of March 2026. We are going through an audit. We should finalize all those processes by August, and then we'll be able to tell you the full story. But we are going to share some snippets of what has happened within the 25-26 year. But what you are seeing in front of you is the 2024-2025 financial year, which has already been audited, and we have shared with Parliament our financial performance and our annual report. So this is basically I showed you the graphic representation as to what happened 2024 to 2025 and the profits that we've made over those 2 years. 2024, we made a profit of 3.3 billion. And the year 2024-25, we made a profit of 4.5 billion. We anticipate that the profit for the current year will be in those numbers. But I will share with you the numbers that I am sure are correct. They will survive the audit, but the profit, we share it with you once the auditing processes have been concluded. We've had growth in our assets. There is a graphic representation of that in a later slide. Later slide. So this is really Sasria's strategy. We call it Vision 2029. Which is really, you have to go back 5 years into that. So we built it in 2024, where we are saying we are targeting as Sasria to be able to have own funds of 30 billion by the financial year end of March 2029. And the way we're going to do that is we've got 5 pillars. Amongst them is we want to secure capital to run the business. The way an insurance company gets capital is its own funds, which I'm saying we are targeting to have 30 billion. The second one is the role that reinsurers play, which you will see in the later slides. Basically, as Sasria, we buy reinsurance to make sure that we can withstand major catastrophes that could affect South Africa. We want to provide desired solutions for our customers. We have recently, the Minister of Finance, some 3 years ago, promised Parliament that he has instructed Sasria to come up with the REP product. That product we had withdrawn immediately after July 2021 because it became unaffordable for us to do so. The reinsurance costs were quite high, and we have been in negotiations since then with reinsurers to reintroduce the product. And I'm happy to say that we have been able to reintroduce that product on the 1st of April this year. We are dealing with issues of making sure that we give our customers a good service. And also one of the things that we'll be doing, given the nature of the cover that Sasria provides, is when there is an event that is covered by Sasria, our customers will be able to get trauma counseling. We've got a growth strategy where we are growing definitely well above inflation as a business, because we want to be sure that come 2029 that we reach our target of 30 billion. The fourth pillar is optimization or operational efficiencies. We're looking at our systems. We're investing in our technology platforms for us to be able to deal with an event like July 2021 much more better. one of the lessons that we learned from July 2021 was that most of our processes were manual. I mean, Sasria moved from a situation where it was dealing with about 3,000 claims a year, and then in that particular year, we had to deal with 20,000 claims. Most of our things that we had to do were manual, and some errors crept in. Right now, we want to automate our linkages with the insurance companies so that we can handle an event like July 2021 much more better. And also, we are collecting data. Previously, Sasria didn't have any policyholder data that was retained by the insurance companies. Right now, we've made significant progress in making sure that as Sasria, we've got the data. We know who our policyholders are. We know where they are located, and we know fully the type of risks that we cover. And the final pillar is the transformation. We have a dual mandate of one, providing cover, and number two, playing a role in the transformation of South African society. And I can say to the members that strategy is being shaped up as we speak, and it's planned to go to the board in June 2026. So when I spoke to you 3 years ago, I said basically where we are as Sasria, we want to restore and defend. Basically meaning that we want to make Sasria basically restore it to the position it was before the July 2021 event. As you know, we had made profits throughout those years. We had built a considerable amount of reserves. The reserves then stood at 9.5 billion rand. We had reinsurance arrangements of 6 billion rands. And then, unfortunately, the event was 32 billion, which meant that Sasria couldn't deal with that particular loss on its own or without the government support. So what we wanted to do in that 3 years was to rebuild and get Sasria to a position where it's better than it was just immediately before July 2021. I can confidently say we have achieved that now, and we are now looking more into the future, as I will share with you later on. And just to repeat basically our vision, our strategic initiatives for the Vision 2029, we would like to review the mandate. I'll provide you with more details. I'll give you more details on our reinsurance strategy. And basically, from an investment point of view, we are sort of liberalizing our investment strategy. But what members should appreciate, we operate since the conversion of the Sasria Act of 1998 in a well-regulated environment where capital management is critical. So our investment strategy is informed by the regulatory environment, the risks that we are seeing looking forward, and we must at all times have enough money to pay the claims. So our investment strategy is on the conservative side because we want to preserve capital, and our target there is to get returns of CPI plus 2.5 without losing any capital in any 1 year. So let me speak about the part that you are very interested in, the financial sustainability and solvency of Sasria. So what are the key messages that I would like to share with you now? Basically, I can say with confidence that we've achieved the premium target of 6.4 billion as of 31st March 2026. So effectively, from the time I spoke to you 3 years ago to where we are now, the company has doubled in size. So, and that has been achieved by 2 premium increases. the one that was done immediately after July 2021, and then the second one that we have just done last year, 1 October 2025, where we gave our clients premium increases of 25% on a weighted average. So we are going through that process of implementing that rate increase, and it's starting to reflect on our numbers. So we've doubled in size. Our capital position, our SCR is more than 400%. As I speak to you, sitting at about 450%. But really the issue, though, that should concern members, and you'll see in the subsequent slides, we have to comply with SCR because it's a regulatory environment. But what July 2021 showed to us was that at that time, Sasria had 350% SCR, but we still went insolvent. The nature of our business is such that we are a low frequency and a high severity business. Effectively, what it means, we're going to have some years where, it's sort of, we feel that it's quiet. We are having claims that we're paying, but they're not big enough to create a crisis. But there is going to be that 1 year where the loss is going to be amplified and it's going to be much, much more bigger. So as Sasria, we need to make sure that we've got the reinsurance arrangement and the liquidity for us to be able to deal with that. But the SCR is really not a true reflection of what Sasria needs to be to prepare for a CAT event. The other key indicator that we have as insurance people, we use a loss ratio. Our loss ratio, 10-year average, is sitting at 30.3%. You should be worried if that number is sitting at 60%, because it means we are, as much as we're getting the premium in, it means claims plus all our other costs, we are not fully covering them. We have excluded from that number the loss of July 2021, which brings the loss ratio to over 1,000%. So that is where we are. Available capital has since improved, but you are looking at 21.6 billion as of 31st of December. And as I said earlier on, we have brought in the rep cover product, and we are looking at SMMEs. So this really just shows you the graphic representation of how the business has transformed over the last decade or so, and also in particular what has happened in the last 4 years, which is a good story to tell. So the premiums have gone up. What has happened to the reinsurance arrangement? In the last 3 years, we struggled to get reinsurance for 2024, 2025. A couple of things came into play. Amongst them, it was an election year in South Africa. You will recall we're having the national and provincial elections in May. So we negotiate our reinsurance from the 1st of April each year. And reinsurers were quite concerned as to how those elections would run. Furthermore, there were other things that were going on in the world. About 60 other countries, including major countries, India being one of them, were also going through elections. So reinsurers, for the type of cover that we provide, reinsurers see election period as an period of concern, because that's when protests tend to happen if people do not accept the outcome of the elections. So there was that, but also we had cost reinsurers quite a lot of money in 2021, 2022. It was not just the Sasria claiming from the reinsurers. There were also floods in KwaZulu-Natal. I think members will remember that. There was also COVID. So the life reinsurance, which more tend to be owned by the same companies, also made quite significant losses. And as that was happening in South Africa, in the rest of the world, we had the Ukraine-Russia war, inflation going up in developed countries, and also social justice. So that year was quite constrained insofar as us being able to get reinsurance cover. However, we put a lot of effort and invested a lot of time. We brought some of the London reinsurers into our show so that they can see South Africa. They can see the challenges that we are faced with. They can interact with South Africans on a day-to-day basis and see whether they should be worried or very worried about us. And out of those various engagements, which are continuing, we've been able, 2025-26, you can see there was a better reinsurance outcome. And then definitely in the current year, 26-27, going forward, we've been able to secure full reinsurance for the first time in the last 3 years. So it's quite good news. Yes, they can see we're going into local government elections, but they've seen how South Africans have handled themselves since our democracy when it comes to elections. So there are no particular concerns that these local government elections will lead, at least immediately, to some form of significant protest. Yes, there are some dark clouds happening that we are seeing forming, but they have nothing to do with the elections, at least local government elections. So right now, Sasria can handle an event of up to 25 billion rand, given what we have built in our own funds and the reinsurance arrangements that we have put in place. We can handle up to 25 billion rands. And if we were to have an event like July 2021 of, let's say, 30 billion rands, then we'll have to ask Treasury and kindness of Parliament to give us, recapitalize us by an amount of 4.3 billion rands. And if that loss goes to 35 billion, will require to be recapitalized by an amount of 9.3 billion. We, I think, as a collective, not just Sasria, Parliament, civil society, business, we really have to play a role to make sure that South Africa never finds itself in the space we were in July 2021. There is really some hard work and tough decisions that I think as a country we need to make to avert that particular scenario. So, as I said, basically we can handle what that graph basically shows is that in July 2024, we were able to handle a CAT event without government support of 10 billion. Then March 2025, it went up to 20. As I'm talking to you now, we can handle an amount of 25 billion rands. As you can see, our own funds have also had that sort of dramatic growth, as that slide, what you are seeing on the right-hand side. These are the claims that we have paid over the years. As Sasria, we've had a phenomenal year and so on over the last 3 years, hence the good profits. Corporate social investment, as I said to you earlier on, really this strategy is being relooked at and it's being strengthened, and we are going to take it to the board on the later on in June. But there is still some work that we are doing insofar, for instance, as community development, where we are working a lot with the community around the Moy River area, where, for instance, we've established, gardens, enabled an early development center, and training some young people into some form of them getting some vocational skills and so on. But we are really we re-looking at this particular strategy? Yes, we are continuing to do the good work that we have been doing before, supporting the development of actuaries, supporting the development of accountants, supporting the development of graduates that will enter the financial services sector, funding some learners at high school level, an investment in a primary school where we're rebuilding its infrastructure and looking at early development childhood as well. But right now, what we want to do with our transformation strategy is to recalibrate it to a higher level, just like we have been able to do the business. Now that we have sort of got a stronger balance sheet, a good profitability, as Sazria, we can start moving forward and say, how do we contribute to changing South Africa's trajectory from where it is now to go to a better place? Some of the legislative issues that we are looking at is basically, as you know, we're a creature of statute. So you've got the Reinsurance Act, which defines what Sazria can insure, and then you've got the Sazria Conversion Act. For us to do anything outside what the Act empowers us to do, we need to make some legislative changes. Amongst the things that we're looking at is the mandate expansion, which could require that Parliament gives the Minister of Finance power to increase the mandate of Sazria, subject to certain requirements, like there is no insurer willing to do that risk. For example, I mean, one of the questions that we were asked is, are we ready to do drought? And some will ask, are we ready to do flooding? In fact, there's flooding that is said is likely to happen in the Eastern Cape sometime during this week. Sazria currently cannot do drought cover. Fortunately, we've got a sister company within Treasury called the Land Bank Insurance Company. It does offer that sort of cover. And we are finding private insurers having less appetite to do climate change risk. So Sazria could be required to do that. And right now, we do not have that power. And also, we would like to put in place what we call protocols for equity. So between Sazria and Treasury, we have a sort of an agreed process that should Sazria find itself in a spot of bother, we will know what we have to do. By spot of bother, I mean if we were to have a loss of the magnitude of 30 billion rands, as you saw in the previous slide, what then needs to happen to make sure that Sazria is able to pay the claims quickly? One of the remarkable things that we were able to do during July 2021 was to pay 80% of the claims within 10 months. That's a good record even by private sector standards and so on. I mean, private sector insurers at that time were battling to pay COVID claims, and Sazria was able to do that. By being able to pay claims quickly, it means people could restart their businesses much more quicker, and then jobs were preserved and the economy was protected. So it's important that we have those protocols for equity. And then we would like to position Sazria as an entity that looks beyond its current mandate, that says when there's a disaster in South Africa, government can call upon it to assist in managing the distribution of disaster funds or immediate responses to a particular disaster in partnership with COGTA and various municipalities. Forward looking, it's been a good year for South Africa. Certain good things have happened in the current year. Parliament struggled to pass the first budget since when the GNU was established. The following was much easier. This year's budget was much more easier. But also there have been some good things that have happened in South Africa. Record tax revenues due to efficiency of SARS. Secondly, the number of tourists that have visited our shores. The third one, if you look at the exports of agricultural produce, we've been able to replace America and find other alternative markets for products that would normally have been bought by the US. The high commodity prices have helped us to drive the surplus to be higher. And also the hosting of the not the GNU, my apologies, of the G20, particularly successful as well. So we've had some very good things happen in South Africa. However, there is only one that we really need to work on. It's the economic growth, as our board chair said earlier on, inclusive economic growth that will create jobs. We have an unfortunate situation where our young people, 60% of them, those that are between the ages of 15 to 24, are currently unemployed. You will see in the subsequent slides that when you've got that sort of situation, you've got all the elements for a catastrophic event should things go wrong in the country. So that is really what should all our focus be. Insofar as the events that we ensure, so SASRIA covers terrorism, politics, political related protests, labor unrest, and non-political. There is really no major events. South Africa is seen as a peaceful country, generally from a terrorism attack. There are two things that bother us, maybe two or three. In Africa, what's going on in the Sahel region? You saw what happened in Mali more recently, also in Nigeria, where they are having some form of terrorism things happening. Our previous involvement in peacekeeping basically does tend to increase the terrorism risk within the borders of the country, but generally nothing to worry about. So we're not majorly concerned, but we are looking at that scenario. Politically, the major thing to look at is obviously the local government elections, and then also the ANC's elective conference. And they were looking at it insofar as what impact will it have on the GNU, hence it gets a special mention. But also we know last month the Democratic Alliance had its own elective conference where it elected new leaders. And then we've got the Madlanga Commission on the go, which basically shows why as SASRIA we've been experiencing service-related protests because of the challenges that our major municipalities have. And I think the Madlanga Commission for us, on the one, it shows what's going on in the municipalities. And more importantly, though, to Parliament is also what is happening in the police leadership. We do know that one of the factors that made the loss of July 2021 bigger than it should have been was the failure of the police to respond in time. So if we are having a situation that we are seeing where, the leadership of the police, there's potentially some vacuum that might be created, it does make us look and say, okay, what's going on? How is it likely to evolve? We've really seen nothing major insofar as labor unrest, except one where two people were involved. Really, I mean, there used to be what is called a strike season in South Africa. We're seeing less and less and less of that. But what does concern us is the xenophobia attacks that are going on, the various marches that are happening in the country. And then non-political is the student protest. Our biggest loss in the last financial year was a Forte University student. They banned some 10 buildings, resulting in one loss of 110 million rands. So that is quite significant. And then University of the Free State at the same time also had its own protest, but the losses there were only in the order of about 12 million. So I'm going to speed up, Chair, being concerned about time. I think all these, the parliamentarians are familiar as to what's happened. Sarah's stance on global issues, the war in the Middle East, the naval drill that we had, our relationship with the US. I don't think I need to spend a lot of time on that. What you have in front of you now are recent protests that have happened around the world. In particular, I will draw your attention to the two that happened in developing countries like South Africa. So we had a protest in Bangladesh where young people again, remember South Africa, it was young people. You go to Chile, it was school children. Also in Bangladesh, and Nepal, you have a situation where young people led the protests, which resulted in those governments being toppled. Now, the Nepal protest, it is called the Gen Z protest. Basically, the young people were protesting over a simple thing. The government tried to ban social media, and then the young people protested. So can you imagine that sort of situation? People protesting because we are saying they can no longer be on Instagram or YouTube and so on, resulting in the government being toppled. And then secondly, in Bangladesh, there was a student-led protest in July 2024. Maybe there is something about July, where the government tried to come up with a quota system for jobs reserves for descendants of 1971 freedom fighters. And there again, it led to a protest and so on. I think the point that I want to draw to your attention is the involvement of the young people. You will see that also play out in the US. In the London protest, it was mainly the older people, because it was more xenophobic thing, anti-refugees, undocumented people, and so on. We've got the local government elections. We do not anticipate anything in there, as I said earlier on. But what I would like to draw your attention is that South Africans are moving into the metros, and the metros, basically, if they fail to respond to this surge of people coming into those cities, we've got a recipe for protest. In Gauteng, in particular, Johannesburg, and so on, the water crisis could also lead to some form of protest. We monitor, the data with Municipal IQ, where we look at municipalities, the number of protests, and of those protests, how many convert to claims. Not all protests lead to claims. And then you can see our loss ratio, which I had averaged out in the previous slide, and how good it has been. These are the events we've had over the years, and University of Fort Hare being the big one that we experienced in 2025. This I have already covered. This is probably my second last slide. There are a couple of events that we are monitoring. And this one speaks to an event that happened in September 2025, where young people were able to arrange a protest using social media, and they went to factories in Pretoria, in the Roslyn area. As you know, the Roslyn area is the home of BMW, where they manufacture 3 Series for global export. And also it used to be the home of Nissan, and Nissan has de-invested from that area now. And I understand that one of the Chinese motor manufacturers is going to be moving in. But before those Nissan had made that decision, young people went to protest. Now, the good thing about this slide is that we are able to show you where our major risks are. where you see the dots, those are significant properties that we insure in that particular area. We are able to tell you the route that the matchers took because of the data and the monitoring that as Sasria we have invested in. That's the good part. The bad part is this. For the first time, the young people in recent memory, that is post 1994, if you want to call that recent memory, they'd used social media to organize an effective strike for jobs. We then 2 weeks ago saw the similar thing play out in Midrand, where thousands of people went into the Midrand area from Tembisa, and they went from door to door asking for jobs. The problem is this: at some stage, should this take national scale, damages are bound to happen. And then finally, one of the things that we are looking at is obviously, the various protests, whether it's Operation Dudula or March on March thing, where we are seeing these protests. First, we saw them also in East London when there was the coronation of some Nigerian chief and so on. People took offense to that. And then in KwaZulu-Natal, they've been playing out for quite a while. And in the last week, they've been playing out in Johannesburg area. So these things that are happening in the country basically gives us reasons to be concerned and say, at what stage will this translate to significant losses to Sasria? We have formed partnerships with the Institute of Security Studies, where they are assisting us in looking at all these various scenarios that are happening in South Africa and what could affect Sasria, and we are trying to create mechanism to de-escalate those things. With that, chair of the committee, chair of my board members, the parliamentarians, I say thank you, and we are ready to take any questions.
Thank you very much. Thank you very much, Mr. Tikwe. That was an informative presentation from your good self. I'm not sure if there is any question. Can I take the questions from my committee members so that we can hear the other thing? At least I'm also informed that National Treasury is also on the platform. That is led by Mr. Dolly, and so we're going to give you the platform after the engagement by the members. I see Honorable Siwisa, Honorable Brett, Honorable Swart, Honorable Ryder, Honorable Hwase, in that order. Thank you very much.
No, thank you, Chair. Greetings to everyone, Chairperson. Also to the team from Sasria, and thank you again for coming and briefing us on your latest since we met in 2023. Chair, I've got only, I think it's about 3 questions, because one of my concerns when the presentation was done is Sasria was speaking about small businesses, but not actually speaking about the climate change, and I think he has touched on that. And the issue that they need to expand the act in order for them to also deal with any disaster that is climate change disasters, your floods, your food and mouth issues that we are currently facing now. So Sasria whether mentioned that the scope of work or your expansion of the Act to include climate change disaster, how will this affect the financial sustainability and the workload? Has Sasria relooked its business model to avoid reliance on the National Treasury for cash inject in the future? And the other one, Chair, is on the turnaround for payments. In 2022-23, it was 25 days. What is the current turnaround for payments that they are dealing with now? Are there any outstanding claims from the 2021 unrest that still needs to be processed? Those are my only three questions, Chairperson. And Chair, I have to run an errand very quick. I'm going to log out. Thank you very much.
Thank you, Honorable Sibisa. Honorable Brett.
Thank you, Madam Chair. Just want to switch on my video. I've a couple of questions. First of all, I want to focus on capital adequacy versus real risk exposure. Now, given that a single unrest event that already exceeded Sasria's long-term capital target, what evidence can Sasria provide that your current reserve trajectory is remotely sufficient to withstand a multi-provincial or prolonged unrest scenario without reverting to another taxpayer-funded bailout? Can Sasria absorb another July 2021 scale event without additional state support? Then secondly, Madam Chair, I want to focus on the dependency on National Treasury. Sasria maintains that it is operational and self-sustaining, yet required a 22 billion recapitalization and still relies on a state guarantee. So is it not more accurate then to say that Sasria's business model is ultimately underwritten by the fiscus, and what concrete steps are being taken to remove this implicit taxpayer exposure? Also on this topic, is the taxpayer the insurer of last resort behind Sasria if your model fails another stress test like in 2021? Coming to the next topic, Madam Chair, I want to focus on the escalating risk environment versus the pricing model. Now, mention was made to risks such as unemployment, infrastructure collapse, and increased unrest, and these are rising. Now, my questions in this regard are, with structural drivers of unrest intensifying, how does Sasria justify a pricing and underwriting model that assumes a manageable risk when the underlying risk environment is clearly deteriorating faster than your capital base is growing? On this topic, I want to get clarity. Are premiums currently priced for worsening unrest risk? If yes, then why did your pricing fail in 2021? And if the answer is no, I want to know, are you knowingly then underpricing the risk? Fourth focus point is the business model scalability versus the catastrophic event reality. Your recapitalization plan targets scaling to 100 billion rand business. But what specific structural reforms beyond premium increases will enable that leap? And why should Parliament believe this is achievable when your current model failed under a single systemic shock such as we've seen in 2021? Is there a funded time-bound plan to reach your targets that does not rely on the Treasury? And then lastly, Madam Chair, I want to focus on SASRIA's claims capacity versus the systemic shock scenario that we've seen. Now, concerns remain about capacity to handle a large-scale claims event. Now, based on your experience during the 2021 unrest, can you state that SASRIA has the operational capacity, the liquidity, and the reinsurance backing to process and settle claims at a scale during a similar or even a larger event? Or would delays and under-settlement again be inevitable? And can you guarantee full and timely claim settlement in a national unrest event? Or can we expect delays again if there is such a big event? Now, Madam Chair, the pattern is clear. One major shock required a bailout. Reserves are still catching up since 2021. Risks at this stage are rising, and the model depends on Treasury when a crisis occurs. So my question is very simple. Is SASRIA truly an insurer of last resort or merely a conduit for last resort taxpayer risk? So with those questions, that is my contribution and the questions to Treasury. Thank you, Madam Chair.
Thank you, Honorable Brett. Honorable Swart.
Good morning, Chairperson. Good morning, everybody. And can you hear me, Chairperson?
Yes, 100%.
Yes, thank you very much. I just want to keep off my camera because my camera is not 100% working.
Yes.
Thank you, Chairperson. Just a couple of questions from my side. Thank you very much for the presentation. Just for clarity on my side, out of the reports that I've read that was issued to us, SASRIA has maintained a clean audit for 5 consecutive years. Yet, Chairperson, and fruitless expenditure persists. How do you reconcile a clean audit outcome with ongoing non-compliance in financial controls? And at this point, does the board consider this a governance failure rather than an isolated administrative issue? And also, Chairperson, on the other question, the report indicates that irregular expenditure arose from asset management fees paid under expired contracts. And the question is, who authorized these payments and what consequence management has been implemented? And the third question, despite a volatile risk environment in our country, SASRIA failed to meet its premium growth target of 10%. Why did revenue growth underperform in a context where demand for special risk cover should be increasing? And then the next question also that I've say is irregular expenditure increased sharply to 16.83 million in 23-24 before declining again. My question, what specifically caused this spike and why were internal controls unable to prevent it? The SASRIA chairperson must be commended for maintaining financial stability and achieving a clean audit. The the persistence of irregular and fruitless expenditure raises concerns about the effectiveness of the internal controls. Chairperson, a clean audit cannot be allowed to mask governance weakness. Furthermore, failure to meet key growth targets and the potential expansion of its mandate introduce both operational and fiscal risks that require closer scrutiny. And then my last one, Sasria is building reserves towards 30 billion rand. Yet previous unrest losses exceeded 30 billion rand. My question for clarity is, how confident is Sasria? I've listened to the presenter. How confident is Sasria that its current capital strategy is sufficient to absorb a similar or larger shock? We see what's happening around us. It's just for me as a person, I just want to have clarity on that one. And the last one is, what percentage of the SMMEs in our country are currently covered by Sasria? And what measures are in place to expand coverage to vulnerable businesses that may not survive future unrest? We know, Chairperson, that our country, we need upcoming businesses, and we see all over how many small businesses are opening, and some of them are creating the jobs that we really need. But I just need for background clarity, how many of our SMMEs in South Africa are currently covered by Sasria? Chairperson, I think I will stand by that first. Thank you.
Thank you, Honorable Swart, Chair of Chairs.
Thank you very much, Chairperson. Good morning, colleagues, and the presenters from Sasria. Thank you very much. Now, I think I'm the only one that remembers that presentation from 3 years ago, because I was there. And I do want to say, I think my colleagues have posed all the tough questions, so I thank them for that, giving me a fairly pleasant job of saying well done to Sasria for some of the systemic improvements that you've reported here today. I think it is important for us to acknowledge that there was a wake-up call, an unexpected event, and that's what insurance is there for. It's what it's designed to deal with. But I think that there was a big wake-up call, and I think that it did require a sudden and quick change. Your adaptation, I think, it looks like it has been quite constructive, and so well done for your response and your improvements based on that. I do think that we've got a long way to go, and I think that any insurance is difficult. Honourable Brits has asked some pointed questions, and as I say, he's asked the tough questions. I do think we need to understand the model going forward. So a simple question that I have is in years when we don't have these big single events, how many claims do you have? So for the last 2 or 3 years, how many claims do you have a year? How many claims are made and how many are successfully concluded? Honourable Sowisa asked how many are still outstanding from 2021. I'm also interested to know that. But yeah, I think it's just a case of we'd like to try and understand the business model a little bit better, because ultimately, as the Finance Committee, we need to, I guess, ensure that Treasury and the National Fiscus is protected, because it is the taxpayers' money, and we're here to keep an eye on that. But yeah, appreciation to the colleagues for the tough questions that they've asked, and looking forward to the responses. Thank you, Chair.
Thank you very much, Chair of Chairs. I saw the hand of Honorable Lekwase, and I'm not sure if she still stands by that. Honorable Lekwase?
Thank you very much, Honorable Chairperson. I'm sorry I was taken out by the system, but now that I'm back, I forgot to raise my hand again. Allow me, Chairperson, to proceed without my camera on. I have a network problem. Let me start by acknowledging and thanking the Sasria team for the insightful presentations they have shared with the committee this morning. And most of the members have covered important questions, but I would like to have specific questions emanating from the slides presented to us. My first question, Chair, will be on slide 10, which was presented to us and shows the profit of 4.5 billion in 2024-25. But slide 22 notes a 25% weighted average premium increase in October 2025 to achieve the 6.4 billion GWP. Now, my question or my interest would like to know how much of the profit recovery is due to premium increases versus the improved risk underwriting, and what impact assessment was done on affordability for SMMEs and municipalities, giving your NDP mandate to promote transformation and economic support. And Chair, I also had a question that was responded to as the CEO was presenting. It was mostly on the enhancement of the ministerial powers to amend and clarify their mandate. But I think on that one I was covered, because my question was going to be that have the National Treasury given them a concurrence. But nonetheless, on slide 7, it states that the REP was withdrawn post-July 2021 and will be reintroduced again in 2026-27 with standalone insurance program. I would like to know what specific underwriting and pricing controls are in place to prevent a repeat of the 2021 exposure, where the reps of 1.1 billion limit contributed to systemic risk. Will the state still be the reinsurer of last resort or the rep claims? My last question, Chair, the slide 26 touched on the youth unemployment interventions. And I want to get maybe an answer, whether beyond the CSI, what is it on how is Sasria's core product design, reducing risk for businesses that employ youth in unrest-prone areas? Have you modeled premium discounts for firms with youth employment compacts? Thank you very much. I will end there for now, Chair.
Thank you very much, honorable members. Now hand over to, maybe before that, I'm not sure this one has been touched. Can Sasria confirm whether it has appointed all board members and the executive management to enable it to deliver on its strategic mandate? I think that is one thing that maybe that can also be, answered by the chair, the doctor. CEO and the doctor, thank you.
Thank you, Chair. Madam Chair, do you want to start and then I follow you? Or do you want me to start?
I think, CEO, the questions are probably, let me just consolidate some of the questions that have been asked.
Okay.
And thank you, honorable members. I'm going to try to respond holistically to the questions raised. On the issue around the capital adequacy and exposure to systemic risk, 2021 unrest was an extraordinary systemic event and effectively exceeded Sasria's capital reserves at the time. I want to reassure members that since then we have rebuilt our capital base through retained earnings, adjusted pricing, and strengthened reinsurance arrangements. However, I must be candid, while our position is significantly stronger today, There's no insurer operating in this space can fully absorb a similar prolonged nationwide event without some degree of external support. So our strategy is therefore to improve resilience and reduce reliance on such support over time. On dependency on the fiscus and national treasury, the SASRIA operates with a sovereign guarantee from Treasury, which reflects its mandate to ensure risks that private market cannot absorb. While we are operationally self-funded through premiums, the fiscus will remain the ultimate backstop in extreme scenarios. And once again, 2021 event was extraordinary. By definition, even from a reinsurance point of view, was a risk that was actually manageable. Reinsurance covers for unforeseeable events, which in this case was a state failure as previously articulated. We are actively working to reduce this dependency through capital accumulation, improved underwriting, and risk transfer mechanisms, but it cannot be eliminated entirely, given the nature of the risk that we face. And I think from an underwriting point of view, I think the comment around the deteriorating risk environment, we have implemented a more risk-based pricing framework, which incorporates improved modelings as well as stress testing. I think pricing is now probably more differentiated across sectors and regions. The systemic risks such as civil unrest, unfortunately, remain inherently difficult to fully price. And I think what we have seen, the nature of these, and as presented by the CEO, is not as predictable or even to a point of modeling from a pricing point of view. I think the focus for SASRIA remains on balancing affordability, sustainability, as well as risk sensitivity, rather than relying on pricing alone to be able to absorb all these extreme events. I take note on the issues of governance around asset management fees as well as irregular expenditure. With regards to asset management fees under prior arrangements, these were approved through existing governance structures. However, subsequent reviews identified gaps in the oversight. And as such, appropriate consequence management has been implemented and governance controls have been strengthened. And again, I think one member highlighted the irregular expenditure in 2024, which was primarily due to procurement process deviation rather than fraud or financial loss. Nonetheless, this indicated control weakness, which have since been addressed again through tighter procurement controls and enhanced compliance oversight. Chair, I agree that a clean audit outcome must not mask governance risk, and this remains a priority area for the board. On revenue performance, I do want to correct the statement. Despite heightened risk environment, revenue has continued to grow, and this also has been moderated by several factors, including, once again, the affordability considerations, the economic pressures on insured assets, and the structural constraints in distribution through underlying insurers. Members will appreciate that SASRIA as an entity does not actually have its own distribution and relies on the agent force, which is basically the insurers in South Africa. One of the areas that management has given us comfort around is the process of ensuring that there's access to data, there's continuous training in terms of SASRIA is understood both from a market point of view, both in personal lines as well as in commercial lines. I think it is very clear that our approach has to be to ensure a sustainable risk-aligned growth rather than aggressive premium escalation. We have seen in the last 2 periods where management has gone out with premium increases that the market is taking quite a strain in an economy that is actually not growing at the levels and the premiums exceeding the inflation and actually to a point of double digit is definitely not sustainable. It continues to actually pose a risk in this company going forward because the market will not be able to absorb these continued costs. On claims volumes and settlement capacity, I'm trying to cover all aspects, and I think management and the CEO can actually go into some of these details. I want to paint a picture. In normal years, Sasria processes hundreds to a few thousand claims annually, with a high settlement rates for valid claims. Again, 2021 unrest presented in over 14,000 claims, which actually put a strain significantly in a system that was not actually capacitated to deal with that. The majority of these claims have now been settled. Although delays were experienced due to the scale and complexity, I do want to actually compliment, particularly the member who was here in 2023, where we reported at the time the support from the insurers or agent companies who were actually also helped in processing claims below R1 million. Subsequently, Sasria has since strengthened its claim system, increased operational capacity, as well as improved processes. However, in the event of another larger scale system shock, some pressures on timelines will be unavoidable. Although we are better positioned than before, and I take note again, 2021 was an extraordinary event in the mall of what Sasria deals with in the previous years. Chair, I would like to conclude to say the patterns identified by members is understood. Certainly, 2021 event exposed some vulnerabilities, but it has also driven substantial reform. As the board, we are comfortable that Sasria remains financially stable and operationally sound, but one can't take away the fact that we operate in a high-risk systemic environment where complete insulation from extreme events is neither practical nor realistic. Our focus is on strengthening capital resilience, improving governance, enhancing operational capacity, and progressively reducing reliance on fiscus, while continuing to fulfill our mandate to protect the economy against risks that the private market cannot bear and will not be in a position to. Thank you.
Thank you, Chair. I'm going to try, Honorable Chair of the committee, please, if I do take too long, please do interject and stop me. Quite a lot of questions were asked, and my board chair has answered some of them, but I'm going to go through them at a higher level, and I'm going to ask the secretary of the committee, if there is something I haven't fully covered, we can always respond to the committee in writing. So without further ado, maybe an easier question to deal with. Let me start with that one. Insofar as the July 2021 claims are concerned, we received 17,571 claims with a total value of loss of 31.3 billion rands. Of those claims, only 44 remain outstanding at this point. So quite a significant, out of 17,571, only 44 remain outstanding, with a value of 105 million rands. And the reason for that, for instance, I know there's one claim of one major manufacturer that we're going to settle during the course of this month, which is about close to about 40 million. And there we went, is because they're going through some forms of legal dispute. So those are the sort of, that's where we are. Going quickly to some of the questions. Sasria will only be able to deal with climate change risks when there is a mandate for us to do so. We have the capacity, and of course, once we have the mandate, then we can start planning for it. We do have the people resources to deal with it. And what will happen from a financial point of view, depending on how that is structured, we should be in a position to be able to do that cover. We've got an idea of where premiums will be, reinsurance arrangements will be, and so on, but we require a change in mandate. For the change in mandate to happen, there must be a change in the law. For the change in the law needs to happen, Parliament must approve the law. So until such time, Treasury brings this matter to Parliament and Parliament follows its due processes to change the law and get it approved, Sasria cannot have anything more to contribute on this particular topic until we see what the shareholder and the South African government and its people want us to do. So that's the other answer. The chair has dealt with the capital adequacy thing. But let me just try and explain. Sasria was formed in 1976. And the reason that, 1979, the reason that it was formed was because the private sector was no longer willing to cover this risk. And in its architecture in 1979, the way it was designed was that the government will be the guarantor of Sasria. It's not unique, actually, for the South African government at that time and even now to take that particular position. Most governments have done that. You've got a similar company in Spain that was formed in 1942. That has a similar arrangement. It's got an unlimited guarantee from the Spanish government. You've got a more recent company called Puri that has been set up in the UK. That was set up during the bombings that were happening in London involving the IRA. And even that one has got unlimited government support. The reasons that government afford this support to these entities in the national interest is because this risk is highly volatile, highly unpredictable, and if you were to have a large-scale loss, as the chair of the board has said, you will need some form of government intervention. The United States government, post 9/11, took a slightly different twist into it. They also provide a guarantor to their private sector insurance companies that are willing to cover terrorism risks. And then you've got similar companies in Australia. It's called ARPC. They are all designed in the same architecture. And Sasria is not unique from a global point of view, given the fact that you've got these systematic risks that the private sector is no longer willing, and the government cannot fold its arms, because what these companies do, they facilitate investment because companies know that they have this form of protection. So take it as a cost of oiling the wheels of investment into the South African economy, which is what we need, because if we do not have the economy growing, you're going to have more unrest and you're going to have more problems and so on. So this is a rather proactive way of dealing with it. Insofar as we cannot guarantee the members, and say, this is what's going to happen, this is what's unlikely to happen. We can look at, as insurance practitioners, what we see on the horizon, what we see in the past, and what we see going forward. Here is one fundamental truth, is that it took 42 years for Sasria to experience that significant loss. And that loss happened over 10 days. Here is something that we didn't anticipate in our modeling for July 2021. If you look, previously I presented to this committee a graph of that particular event happening over 10 days. You will see on day 4, the claims peak to the order of about 14 billion rands on day 4. Why did they peak? It was because the people could see that the police are not responding. And then there was looting around the country. And that's what made that loss bigger than it should have. So we had thought that the police will respond, and we know that we didn't. So in our future modeling scenarios, we put an element of that in it. So the other thing that members should also remember, because I did say this is a low frequency, a high severity business. So you're going to have years, which I showed you in a particular slide, where we've had our loss ratio, as I said, the average is 33%. So during those years, as the chair was saying, we're accumulating the reserves and building up. What happened after the conversion of Sasria, 16 billion rands was taken out of Sasria. If that 16 billion rand had remained invested in Sasria, that 16 billion would have grown to 55 billion rands. And then Sasria would have been able to deal with the claim without government injection. So it's a balancing act in that particular way. In its previous design, Sasria was not designed to pay dividends or tax, and now subsequently it does pay dividends and taxes. Treasury for now has agreed that until we get to the 30 billion rand mark, and we'll have further discussion, there hasn't been a request for a dividend. But the role of the state will always be there. Insofar, I want to deal with the issue in all the documentation and the strategy that we have submitted to Treasury and subsequently ended up in Parliament. Our target is to build to 30 billion by 2029. We will revise that number when we get to 2029. But I honestly, I was a bit I was not sure where the 100 billion rands comes from, but generally our target is to 100 billion rand. As I showed in the presentation, we have doubled in size. There's a particular question where in the 1 year we had set a target of 10%, and what we actually achieved was above 9%. In fact, if you were to round it off, it gets to 10%. I'm not trying to make excuses. Yes, we didn't meet the target of 10%, but we're fairly close to it. This given, you will recall that there were certain GDP growth numbers that we used for the planning, and those GDP numbers South Africa didn't meet, and those play a role. They do affect our premium capability and so on. But also, one of the things we had set out to do when we went into the restore phase, and I think management should not be criticized for that, we set quite ambitious targets because we wanted to recover quite quickly. So, and I think it's a good thing to set your bar high so that if you fail close to it than setting your bar low and then thereafter, achieve the results in that particular way. Insofar as operational capacity is concerned, we are not concerned. As I said, we performed better than the private sector in the manner in which we handled the July 2021. The entire industry, our customers were quite pleased in the manner in which Treasury and Sasria responded to that particular need, because there were concerns that Sasria will not be able to meet those claims, and the delays were not that significant at all. In fact, all our policyholders, in fact, Sasria got a favorable rating. We do acknowledge the fruitless expenditure and irregular that we have incurred despite of this performance, and we are continuously looking at our controls and making sure we've got the audit committee looks at this hawkishly, and they demand of us that we make sure that the controls are quite good. I'm trying to cover, I think I have dealt with the issue of SMMEs and the vulnerability. It's something that is close to our hearts. It's something that we would like to address. But right now, it's a challenge because, as I said, the commercial equation doesn't make sense. But given the improvements in our banking sector and in technology, we should, in the next 2 years or so, be able to cover some of these particular aspects. Then there was a question asked about the REP product as to how sustainable it is and so on. What we've been able to do, okay, maybe let me just go a step back. Sasria, to all its clients in South Africa, it insures them up to a maximum of 500 million rands. So when we issue a Sasria cover, which is fully covered by Sasria with the CAT reinsurance program I spoke about, that I presented on earlier on, the limit that anyone insured can have is 500 million rands. The REP cover sits on top of that 500 million, where a client might buy an additional 500 million rands cover. So what have we been able to do to protect Sasria's balance sheet insofar as this business is concerned? Sasria only takes 20% of the risk. 80% of the risk is insured with reinsurers. So what has happened is that the reinsurers, given the good results that Sasria has experienced over the last 3-4 years, and what they are seeing happening in South Africa, as I said, we had invested in bringing them over into South Africa. It's a continuous process of gaining their trust and building an ongoing relationship. The reinsurers were now able to give us 80% cover for that risk and at lower premiums than they were in 2021. So that is how we are sort of protecting ourselves against that. And insofar as our pricing is concerned, I think the chair has dealt with that. Currently, as I said, we are unable to identify who our customers are. We are unable to identify whether this business is a young business because we just didn't have the data. We are busy collecting that data, but any data that we get as Sasria will be a reflection of what's going on in the entire insurance industry. In future, I hope I will be able to answer that question competently. Chair, I tried to sort of summarize the questions that were asked and not respond to an individual member. But if, as I'm saying, if there are questions where the committee feel we haven't dealt with them adequately, we are more than willing that we provide written answers to the committee. Thank you, Chair.
Thank you very much. Mr. Diko, I think you didn't try. You summarized and you did well, and you were even workshop us, especially those who were not there on the sixth administration, on the status of the Sasria. Thank you very much, Mr. Diko. Thanks very much, Chairperson Dr. Mgoti. Thank you for availing yourself to the briefing and the questions from Sasria. We hope that you're also going to meet again. This is not the first and the last. If there's any other question, members will be able to send to you through the Secretariat and you'll be able to assist. Thank you very much for availing yourself. I think you can log out if you wish to attend to other things so that we can stay with the National Treasury, or if you can want to listen to the National Treasury, you also feel free to do that. I now hand over to National Treasury to brief the committee. I'm told that the National Treasury is led by Mr. Toli, and the Advocate Ferreira will be doing the presentation. If I'm correct, Mr. Mangweni, I think that is in order. Can I now hand over to Sorry, National Treasury. You have 30 minutes. Mr. Chico was enjoying the briefing to the committee and also took all the minutes. But anyway, it was fine and it was interesting to the committee members. National Treasury? Advocate Farrer.
Good day. Thank you. Thank you, Honorable Chair. Honorable members, good day. Let me start by apologizing. Our DG and DDGA were not available. They're on a strategic session with the minister, so we were called in. We do the work that you asked about, so we do have a good sense of what the issues are. We are the chief director that's responsible for international development cooperation in the budget office. So we just wanted to say some things about the tabling of the German agreements, but also the German development cooperation relationship with South Africa. The first thing to say is that we've had a very long and good relationship with the German government, and they've been an exceptionally good partner, even in a period where other development partners were withdrawing from South Africa. And of course, the USA being one of the most visible withdrawals recently. But they have committed to also continuing support to South Africa, which is a very good thing for us in the development space. They have, since 1994, given us around 2.5 billion euro in support. And that is made up of loans, which is concessional in OECD DAC definitions, but also grants and technical expertise. So we have benefited a lot. They have also committed to continuing support over the next decade at least, and they've not changed substantially from how they've given support. There's a reasonably large sum of grant support, but a larger amount of concessional financing. And of course, they've been giving us financing agreements which relate to technical and financial cooperation since 1994. We have overarching agreements with them which almost provide the basis, not almost, they do provide the basis for the programs that we create over time. So from that perspective, we've continued to work with them. This particular question comes when we were asked to table in Parliament, so we are doing so. Simon has prepared, or Advocate Ferreira has prepared a short presentation. I don't think we need 30 minutes for it, but he will let you know if we do. So I hand over to him now, but I also stay to take any questions that may come from the committee beyond this particular presentation. I thank you, Madam Chair.
Thank you. Advocate.
Thank you, Madam Chair. Thank you, Robin. Robin's touched on a couple of the issues that are raised in this presentation. But as he said, we were addressing specifically a program or an agreement that is currently being tabled or is currently with Parliament. And that specific program is the strengthening participation in the energy transition. It is a program that, sorry, I'm trying to move my slide, that falls within the type of cooperation offered by the German Development Agency, the technical agency, which is called GIZ. It is a program that sits within the German contribution to the JETP program. So it's support for the program. The slide that's currently up with respect to development cooperation between the two countries is essentially what Robin spoke about the history of the program.
Advocate, there is
Yes,
a request. There is a request on the platform to increase the volume, please, or come closer to the screen. Thank you.
Yes, ma'am. Sorry, I'm just quickly going to look see. Madam, is it better now?
Yes, yeah, I think better. Yes.
Thank you, madam. My apologies for that. I was just saying that the slide that's currently up deals with some of the history between South Africa and Germany. The focus areas that have been agreed are listed there. It's civil societies that do programs in violence prevention, economic development and skills transfer, climate and energy, and health, specifically with a focus on vaccine projection. This particular program falls within the JETP umbrella of support from Germany, but it is technical cooperation, so it will be implemented by GIZ. Trying to move on. As Robin said, the Germans have committed to further support in the future. The latest binational negotiations occurred in November 2024. 276.5 million euros were committed for the period 25 to 26. Now, the German mode of operating is to do the commitments every 2 years within these biannual negotiations, but that doesn't mean that it needs to be programmed within those 25, 26. It's essentially for their budgeting process. So the current agreement comes out of the commitment that was made in, I think it was in 2022. As mentioned, the 276, 200 million of that is for a loan, which is, as I understand it, currently being negotiated, and 76.5 million is in grants and technical assistance. So the current program comes out of that 76. Sorry, it wasn't out of this commitment, but it would come out of the equivalent of that 76 from the 2002 commitments. As Robin mentioned, Germany is our biggest bilateral development partner, and it's been a particularly good relationship. The project is currently only specified at a fairly high level. You can see there that the aim is to build long-term buy-in and acceptance of the transition, particularly by focusing on the communities that are going to be most affected. The ways in which that is going to be done hasn't yet been specified. That will be done later in an implementation agreement, which will be concluded with the implementing agency and the implementing department. One of the reasons that German technical assistance is valued for this is because they also had a move away from coal-based energy towards greener technologies, and are politically very aware of the impacts on the communities that specifically are based around kind of the coal economy. So the experts that we received will have some experience with that. In addition to kind of strengthening the socioeconomic development of the new models. So Germany is quite a valuable partner to have on this sort of project. In addition to the loans that I previously mentioned, this essentially provides support to those loans, which account for a larger portion of the commitments. As I've already discussed, it's going to be personnel, inputs, experts, and if appropriate, financial contributions. So part of that 4 million euros might be used as financial contributions, but generally financial assistance comes from KfW, the development bank, and GIZ does technical in-kind contributions. Because it falls within the JETP commitments and it is around the transition, it is the Department of Electricity and Energy that will implement on the South African side. Essentially, the reason that this has been brought to Parliament is in terms of Section 231 of the Constitution, which states that, 231 subsection 3, which says an international agreement of a technical, administrative, or executive nature should be entered into by the national executive must be tabled in the Assembly and the Council within a reasonable time. The current agreement, I think it was signed fairly recently and has been forwarded to Parliament. The method in which this agreement is to be signed is through an exchange of notes. And the exchange of notes specifies that the agreement only becomes effective once the requirements, the internal kind of national domestic requirements have been fulfilled. So the opinion that we've received from DIRCO's on previous agreements is that part of the requirements are that it be tabled in Parliament. That was a bit of a change from historically, where because it says within a reasonable time, the tabling wasn't seen as the effective start date, but now it is interpreted that way. The German embassy or the German implementers essentially are waiting for that start date to be effective before they start with the implementation level agreements and the project scoping and design. So the yeah, that essentially is where we are now. Is that we are hoping to secure a start date so that the program can start. It has been delayed for various reasons, including kind of negotiations and cross-departmental coordination and so on. But the Germans are eager to start, and we're also eager to receive the support. I think that covers the presentation, Madam Chair. If you'd like to open for questions.
Wow, short and sweet. Okay, thank you, Advocate. Thank you, Mr. Toli. Honourable members, I think this is your time to ask questions from the presentation made by the National Treasury. I received the apologies. I see Honourable Suisa is back. There is also apology from Honourable Ryder. So, honourable members, Advocate, it seems that your presentation was perfect. Everybody knew about it. I don't see any hand from members here. Okay. I guess it was straightforward, the presentation. And yes, thank you, Honourable Suisa. Honourable Bress, no question from me. Thank you very much. Thank you very much, National Treasury, for your presentation. The briefing to the committee, and we appreciate your time for taking time to come to the meeting to brief the committee. Thank you very much. You can leave the meeting if you wish, because now we want to deal with our committee minutes, which is our internal arrangement. Thank you very much.
Thank you, honourable members and honourable Chair. We will leave. Thank you.
Yes,
Bye.
thank you, Mr. Toli. Thank you, Mr. Toli. Thank you, Advocate. Thank you so much. Honourable members, can we just go to our minutes so that we are done with those? And we would like to apologize for having so many minutes and not being able to deal with those minutes in time. Thank you. There is the first set of the minutes, 17 February. Honourable members, the front page, the correction. Your first page, page 1, page 2. Dr. Mangwen? Page.
Aye, Chair.
Yes, page 2. It's like you're in page 3 already. Okay. Page 4. Page 5. Page 6. Oh, that is page 5. Thank you very much. And there's the minutes of the 17th February. It's 17th February, ne? Yes. Move on the seconder for the adoption of the minutes.
I move for adoption, Madam Chair.
And our Brett.
I will second, Chair. Paul.
And I will start. Thank you very much. 23rd, the minutes of the 23rd. Page 1. Page 2. Page 3. 23rd.
I propose,
Thank
Madam
you.
Chair.
Honorable Brett.
And I second, Chair.
Honorable Hwase, thank you. 27, the minutes. That was virtual platform. Page 1. Page 2. Page 3. Page 4. Page 5. Page 6. Page 7. Page 8. Page 9. Page 10. Page 11. Page 12. Page 13. Page, okay, 13, that's the 14 is the signature. I think that is the ministerial briefing on 2026 budget. Committee.
I move, Chair.
Honorable
Chairperson,
Hwase.
okay, sure, then I'll second.
Honorable Hwase. Honorable Swart.
I'll second the Chair.
Okay, thank you very much. We are done with the minutes of the 27. The 3 March. Page 1, that is the briefing on the 2026 budget by PBO and FFC. Page 2, page 3, page 4, page 5, page 6, page 7, page 8, page 9, page 10, page 11, page 12. I think this was the joint meeting with the Standing Committee on Finance on Dr. Masangai. 3 March committee.
I will propose, Madam Chair.
Thank you, Honorable Brett.
I will second, Chair.
Honorable Sir, thank you. 10 March. Thank you. Page 1, page 2, page 3, page 4, page 5, page 6, page 7, Page 8. Yeah, that is page 8. I think, in fact, it's page 7. The page 8 is the public hearing on the fiscal framework and revenue committee on the 10
I
March.
propose that we accept, Chair.
Thank you, Honorable Swart.
I will second, Madam Chair.
Thank you, Honorable Brett. Thanks very much. 13 March, page 1. Page 2. Page 3. It's also the joint meeting. That was the joint meeting with the standing committee. Page 4. Page 5. Page 6. Page 7. Page 8. Page 9.
I propose, Madam Chair.
Thank you. So on March, Honorable Brett propose. Honorable Lehase, second. Thank you. Uh, 17 March. March, that is page 1. That is the consideration and adoption of the committee report on the fiscal framework. That was also the joint committee with the standing. Page 1, page 2. I think that's it. The page 3 is the signature. Members?
I move, Chair.
Thank you, Honorable Lehase.
I second, Chair.
Honorable Brett, thank you. The last set of a minute, 18 March. The consideration and adoption of the report also on the fiscal and revenue. Page 1, page 2. Members?
I'll
I
propose,
move,
Chair.
Chair.
Honorable Hassan, Honorable Sar, second. Thank you very much, honorable members. Thank you very much for your participation on today's meetings. And we hope to make sure that whatever that we have discussed, or especially on the Treasury and the National Treasury, we're still going to digest it, especially on the briefing by the Treasury, because since it was deliberated on the 6th Parliament. So thank you very much, honorable members. I don't want to waste your time for today's session. The meeting stands adjourned. Unless if there is any announcement, honorable, Dr. Mangweng, is there any announcement? Have you arranged lunch?
Yeah, sorry, Chair. No announcement from my side other than to remind members they have taken Parliament to the people next week in Klerksdorp. Thanks, Chair.
Okay. No, thanks very much. That is the announcement. And thank you very much.
Bye-bye. Thank you.
Sis Esther. Sis Esther, thanks very much for your reporting and also the submission. Thank you very much. Dr. Mangwele, thank you very much. Honorable Lehase?
May I kindly use your platform to kindly remind members that tomorrow will be considering the negotiating mandate, so they must make sure that their provinces sends them the negotiating mandate.
Oh, okay. Thank you. You also reminded me.
Yes, I have a meeting just after this meeting. I'm switching over the 1 o'clock now to the Budget Committee in Westcape. Thank you, Chair.
Okay. Thank you very much. Thank you. The meeting stands adjourned.
Thank you. Bye-bye.
Bye.